Hello everyone and welcome to Crypto Chris channel. Bitcoin is once again at an all-time high, but this time the story is much bigger than just the price. We have ETFs, regulations, Michael Saylor, the Wyckoff structure, golden and dead cross signals, and even the US Senate changing the rules of the game. Today we are talking about the most important indicators behind this bull run and what some predictions are telling us about the price levels we might see Bitcoin reach in the near future. During the morning trading session in the US, Bitcoin broke $109,000 mark, surpassing the previous peak from January when the price soared just before Donald Trump's inauguration. So, interestingly, in just over a month, Bitcoin has jumped over 46% after fears about tariffs and trade tensions in April that crashed the price. Now we are witnessing one of the fastest and strongest recoveries ever, and Bitcoin has at least in this period performed significantly better than the US stock market. This is not just an unfounded pump. ETFs pulled in a net inflow of 3.6 billion in May alone, and it's not just Wall Street hype. Michael Saylor is buying again through his company, and new partners like 21 Capital are entering aggressively, but perhaps most importantly, regulation is finally moving in the right direction. The US Senate is progressing with stablecoin regulation, and more countries are considering national reserves in Bitcoin. These are some institutional foundations we didn't have in previous bull runs. And that's why, for all of you who held Bitcoin through all these years, when people called you all sorts of names, when you survived FTX, Celsius, the Luna collapse, BlackRock theories, and when you were asked what if it goes down to zero, this is your moment. We are not just talking about the price here, we are talking about confirmation that the idea of Bitcoin has survived every hit and now stands stronger than ever. And as things stand, if the momentum continues, it's not impossible that we head towards $120,000, maybe even higher, possibly before summer. When we enter price discovery mode, it really becomes difficult to predict where the next peak will be. Fibonacci retracement can be used as one of the tools to predict a new high, but nothing is ever guaranteed because this always depends on factors that are unrelated and completely unpredictable. Also, we are about to see something you might have noticed in recent media headlines, so I decided to comment on it a little bit. Bitcoin is soon expected to experience the phenomenon known as the Golden Cross, a technical indicator that occurs when a 50-day moving average crosses above a 200-day moving average. This signal is often associated with the start of the upward market trend, but it should be considered in the context of a broader price behavior. Before the Golden Cross happens, we usually see so-called Death Cross, the opposite indicator where the 50-day moving average falls below a 200-day moving average. Although the term Death Cross sounds worrying, historically it often marks local bottoms for Bitcoin's price. Examples from 2021, 2023 and 2024 show that after a death cross a significant upward phase typically follows, making it a good moment for short-term buying. Before the actual death cross, price often declines, then recovers and rises after the signal is officially confirmed. This is because the death cross only happens when the price is falling, the 50-day average must drop below the 200-day average, and due to panic, this signal sometimes causes selling occurs, but historically it has been a favorable entry point. On the other hand, the Golden Cross appears when the price is already rising, and meaning the market is in a phase of strength. So after the Golden Cross, growth usually continues, but this is never guaranteed. For example, in 2021, a short-term price drop happened after a Golden Cross before the uptrend resumed. And also, in some years, the Golden Cross can mark a peak followed by a small decline. So overall, the Bitcoin market tends to show long-term growth, so the Golden Cross often is a good indicator for investment, though with some caution. It's also important to note seasonal patterns, Q3, like July, August and September. They often bring weaker market activity and declines, which should be considered when interpreting those technical signals. In any case, both the Death Cross and Golden Cross represent valuable signals in Bitcoin technical analysis. The Death Cross often marks a local bottom and can be an opportunity to buy before a future growth, while the golden cross usually signals continuation of growth but may be followed by short-term corrections. Markets are not always predictable, so it's important to monitor other factors and not many decisions based on a single indicator. Historical data suggests that buying on a day of a dead cross or a golden cross can be profitable, but every cycle is unique. Therefore, the upcoming golden cross represents a positive signal, but it's wise to remain patient and use it alongside additional analysis and strategies. I also talked about this on X, formerly Twitter, where you can also follow me to stay connected on multiple platforms. Now let's take a look at the Wyckoff pattern, one of the most famous models in market technical analysis. Currently we are in phase Z, which is in this methodology, it's known as the expansion phase. This is the moment when the price breaks out of accumulation and enters a new growth phase. In these charts that I'm showing, you can see how the Wyckoff structure is guiding us toward a potential target of $130,000 for white Bitcoin. Although technical analysis is not a crystal ball, the fact that many previous cycles have perfectly followed this pattern gives us additional optimism. The Wyckoff method generally divides the market cycles into 5 phases: accumulation, markup, distribution, and markdown, with phase E representing the breakout from uncertainty, where buyers are taking control and push the price to new highs. For all of you who have held for all these years and did not sell when it was the hardest, we may potentially be entering the zone where the fade pays off. If Wyckoff proves accurate again, we are heading towards a new chapter with a possible all-time high far above the current price. Next, we have an interesting statement from a Standard Chartered bank. Based on some data they allegedly obtained from SEC, they have predicted that Bitcoin's price could reach as high as $500,000 by 2028. I'm not sure exactly what SEC data are referring to, but regardless, the fact that a major traditional bank is making such a forecast is a bullish in itself. Now, realistically speaking, will Bitcoin really hit a $500,000 by 2028? We don't know. But we do know that if the institutional wave continues at this pace, with ETFs countries considering Bitcoin reserves and growth globally demand, surprises are definitely possible. And maybe the market, as it has done many times before, will pleasantly surprise us. Another big piece of news are coming from the US. The Senate has passed a law known as the Genius Act, which regulates stablecoins. The vote passed with a large majority, 66 to 32, with bipartisan support, meaning the chances of the law becoming official are very high. So why is this important? Because this law clearly defines stablecoins for the first time as payment instruments and not securities. This means there will no longer be tax obligations when sending USDT from one wallet to another, which is huge. Companies, banks, and institutions will be able to accept stablecoins like USDT as legal means of payment without needing to go through the traditional banking system. It also enables easier inflows of capitals from outside the US, which further strengthens the position of the dollar and crypto on the global stage. Interestingly, the law does not exclude foreign issuers like Tether, although additional regulations will likely follow. Tether has already announced that if the law passes, they will launch a special version of the stablecoin fully compliant with US regulations, but this will not replace the existing USDT, Tether, which will remain dominant in international use. All of this is a positive development for crypto overall, as it marks another step toward broader acceptance and legitimacy within the traditional financial system. Of course, there are concerns. Some fear that it could be a Trojan horse for introducing a digital dollar, CBDC, but so far there are no direct indicators that this is the path being taken. In the short term, given the current market sentiment, this is another win for the crypto ecosystem. If we look at the capital flow within Bitcoin ETFs, it's very clear how powerful their influence is on Bitcoin's current price rise. This is not just another statistic, it's one of the key drivers behind the new price surge. In the last 13 days, there have been 11 days of positive net inflows, with only 2 days showing outflows, and those outflows are relatively negligible when put into context of the total volume flowing into ETFs. These ETFs, especially those led by BlackRock, act like a giant vacuum constantly buying spot Bitcoin from the market, reducing supply and increasing upward price pressure. This trend clearly shows that institutional capital is not only returning but also laying the foundation for potentially the most stable bull run yet. And finally, here is a fresh statement from Michael Saylor, the man who turned strategy into the world's largest Bitcoin treasury. He just tweeted, "If you're not buying Bitcoin at all-time high, you're leaving money on the table." In other words, if you're waiting for the dip, you might only see it in old charts. Time doesn't wait, inflation doesn't pause, and Bitcoin is making history in the meantime. So if you stayed with Bitcoin with everyone else was running away, now you're starting to see the rewards come in. But this is just the beginning. Golden Cross, institutional money, clear stablecoin regulation, and everything else coming show that we might be facing the biggest cycle yet. If you found this video helpful, leave a like, subscribe if you haven't already, and of course, follow me on X for more comments and analysis. Thank you for watching, and I'll see you in the next video.